Okay, welcome to a capital hungry breakdown of crude oil, US oil. Okay, so before we start, we are just going to reflect our last week's breakdown, what we were looking for and trying to take advantage of in the markets if we had the confirms to do so. Wait, oh shit, I got to share the entire screen to do that here. Okay, you guys can see it now. So basically what we were looking for was a double bottom created at 21.2 upside, looking for impulsive upside and a break of this bearish market structure, a hold above 29.10 and a continuation up. Safe buys would need a break of the bearish market structure, retest of that, end of the current oil price war that Saudi Arabia started, OPEC negotiations to cut some of the production between countries involved in OPEC, China rebounding their economy, and price to hold above 29.10. So to start the week, we initially got the double bottom at 21.2, a very key buy area we had shared. Very strong bounce off that level for a $3 move to the upside. We had no continuation or validation to break the previous high. Global demand is still very low. US crude oil inventory reporting is being ignored. We had no validation for the safe buys. We were looking for this for safe buys and to scale in from here and continue up to the gap fill regions. But even though China is showing signs of rebounding their economy and their productivity starting to come back to normal levels, meaning millions of cars back on the road, people going back to work, industrial and production going back to regular levels, as I was saying. Um, it's not enough to offset the Saudi Arabia price war and global demand being low overall, as the coronavirus has like the whole world on lockdown pretty much. Only China is now like recovering and quote unquote has defeated coronavirus, and we're seeing Asian equities rebound a bit, but the globe overall still very low demand. And on the flip side, we have to remember that during the trade war, during the period of time where the US sanctioned Iranian oil, China was still purchasing that oil from Iran backdoor and has millions and millions of barrels of Iranian oil stocked up on their ports ready to use. So they can go through that as they're rebounding their economy before they even need to touch really increasing their oil demand and bringing in more oil. So we have to keep that in mind. So currently, what we have going on in the oil market as per fundamentals is that global demand is still low. Coronavirus is still heavily impacting the U.S., has North America on lockdown, and has Europe and the UK on lockdown. Just China's recovering, like I was saying. Crude oil reporting is getting ignored. It's heavily supplied. So low demand, high supply equals lower price potentially. The price war is showing no sign to an end. Does not want to come to any negotiations on cutting production. And you're having pipeline producers in the US messaging the suppliers and reaching out, literally speaking about how there's way too much coming in right now and just being stocked up for no reason and it's not being used. So you can reflect this as these headlines were shared in the trade room, but right now the situation of oil is showing us very low demand and very high supply and potential to go into those lower macro targets of $15 a barrel, if potentially even $10 a barrel until we have fundamental validation with technical break of structure alongside those fundamental confirms of oil demand coming back up on the scene. So I'm going to keep these levels. Actually, we can just redo the levels. We can redo everything. Because when we're looking at the monthly here, extremely bearish. You're seeing we're flowing in the trend where we can come deep into these historical lows here. And the overall trend is very bearish on oil with sellers, just on a macro perspective, very impulsive seller moves here. we're following that similar pattern in perspective now, right? So really in this market, we're just looking for continued pullbacks um, on the intraday perspective and price coming to test some of these demand areas to the left here and these historical lows. But the market structure on higher time frames, all time frames, is very bearish, and the fundamentals make sense with that. Sorry. I'm just gonna clean up some of these lower levels to get some nicer ranges to play with, but there's a lot of support and like noise in between here. So okay, so we have those levels set. I'll refine those after when I send it over to you guys. But so we're just gonna go down the time frames now. Look at pretty much we can see that this monthly is closing extremely bearish. What would be ideal is for the new month to just to pull back and come test some of these key areas here. You can see here around 34 to $33 a barrel perhaps, and then create that monthly top wick, grab that liquidity. And if we don't have the fundamental validation for um, for upside or reversal on oil, being mainly being a coronavirus vaccine to bring back global demand, what else could really do it? I don't really see a war coming up anytime soon with how the world is on lockdown. So and, and the price war. So we really need an end to the price war. Negotiations between OPEC to cut production and global demand back to start driving the price of oil back up into the 40s and 50s and create this corrective phase that you see happen. Because this impulsive move has already been fairly strong. I can just see it coming down even a bit deeper to possibly test $10 a barrel and then doing a corrective phase up. Which has some weird gaps, but just to show the structure, because when I draw on that other one, the levels still come back up. So just to show the structure I'm talking about. The impulsive sellers moves. Then we have the corrective phase. These are our low demand areas. And I see some very nice areas of interest here. So I'm seeing sort of go across, something like that. This was the last previous low and broken piece of market structure. This monthly candle is closing. New month is setting up. The new month could potentially close that technical gap fill point as well. Still remain very bearish. Create a monthly top wick, and then start making its way down to those $10 lows, possibly even single digits. We don't know because the market's going crazy right now, but we do not have any validation for long-term buys just yet, fundamentally or technically, even when we start going down the time frames and we'll look at the market structure deeper now. That's what I'm seeing on the monthly. The weekly supports that. Don't mind this. Actually, I guess that's where the gap is, right? It's around $40 a barrel. So it's good to know and keep that just in mind there. no breaks of previous highs, very strong seller's pressure, impulsive seller's moves. I'm just looking for this potential gap to be filled, the new monthly topic to be formed. I know this is a pretty significant move going up to $40 a barrel. We could even start to just reject around when the new wick comes to test around $30 a barrel. It I'm just sharing what I think would be absolutely ideal to take advantage of and to set up the new month and to fill that technical gap as well. Oil still has. These candles look different than the other pairs as well. So basically, I'm looking for this new month for now, price to hold the support level. We have that low formed. We have a break of the previous low, very bearish market structure and seller's pressure fundamentally. Looking for a lower high formed. Man, my thing's glitching out. I didn't mean to draw like that. Looking for a lower high formed. And if we get a gap fill, that to me would be a premium sell area to first have this gap close around $40 a barrel, but we might not get that. For long-term buys, really on oil, we would need a break above bearish market structure. So we would need a break above. I don't know why my pen is so laggy right now. We would need a break above the structure cleanly and those previous points shared on last week's breakdown. OPEC negotiations, enter the price war, China and global economic rebound, break of bearish structure. We do not have any of that yet. So we're just looking for a lower high formed and continuations down to potentially $15 a barrel. This is still remaining in bearish market structure, and then bam to new lows. And I'm seeing this bigger potential pullback just because it's a new month setting up as well. I actually see like 15. I shared that in the macro here on March 10th when I was talking about once all this coronavirus stuff fades from the market, oil will get bought up from its lows, dropping to $15, $20 a barrel as the Russia-Saudi price war continues. Oil, so still very possible that that's going to come true. Any questions, guys and girls? Any girls in here? Basically, oil demand is still very low. Supply is still very high. Bro, this guy's so slow. You can just check the exact mark chart from last week. Look, I just pulled up. I said this is what we needed for safe buys. Just said it. Current conditions for oil fundamentally is demand is extremely low, especially in North America and Europe. because the coronavirus has everything on lockdown. This initial impact we first saw take place in Asia and specifically China when oil first started dropping from $50 a barrel was because China's demand was so low. That started to ripple effect into the world's demand being so low. The whole world went into lockdown. Initially, remember when we were just reading in headlines when it was first just spreading, and it was just mainly in China, and China was doing all this lockdown stuff, and everyone's like, "Wow, China's crazy. Holy, what's going on there, man? China's not like that's not right." And now the whole world's doing that, but China has quote unquote defeated coronavirus. Their demand being back alone is not enough to offset global demand being low because of the lockdown and coronavirus, possible coming near a recession or already in a recession. And like I shared earlier, the fact that even if China does rebound, they still have a shit ton of Iranian oil stocked up on their ports from 2019. So they still have a lot of supply on deck of oil. Yeah, they're still reporting infections and deaths, but it's drastically decreased compared to what it was. Like they're going back to work, cars are back on the road. Okay, so basically, we know that the global supplies of oil is extremely high. Russia is saying they have no problem outputting more oil to combat and fight back against Saudi during this oil price war. Saudi says they have no problem increasing their output. They have no problem slashing their prices, right? OPEC, the oil cartel, does not want to come to any agreement or have any meetings on the deflating price of oil as of right now, as it stands. And this was shared in the trade room, where we got pipeline operators asking oil producers to reduce the output because there's an overwhelming amount of supply that is not being sold. And then you have the OPEC presidency urging an emergency meeting on collapsing prices, but the members said no. That was simply it. The member countries of OPEC just said no. We don't want a meeting. Russia, Saudi, they said no, meaning it's signaling to us that the price war is not coming to an end anytime soon. This can change if we get the confirms that it changes. If we get confirms that OPEC is going to have a meeting, they're going to come to an agreement and stop the oil price war and actually start cutting production, right? Coronavirus vaccine comes into play. The world stops this global lockdown and goes back to work, goes back to regular productivity. Oil demand increases globally. You have oil demand increase globally. You have OPEC create some negotiations between themselves on the output and the prices. Then okay, oil has some fundamental validation to go back up into 30s, 40s, $50 a barrel. But right now we don't have that. So yeah. All I'm seeing is the potential because it's a new month and we know how monthly candles they can set up price. They create their wicks. There's a higher potential, anyways. There's a higher probability that they create their wicks first, right? Or they create a wick. So I'm just looking for the potential for the new month to correct some of this downside move, still remain in the bearish market structure, and then oil just continue down as the globe is still on lockdown. Coronavirus is still spreading in the US and Europe. There's no vaccine. Global supply is extremely high. And yeah, there's nothing, and even the market structure itself, we have no changes in this bearish market structure. It would be ideal to get that gap filled, which was around $40 a barrel, but like I don't know if we're going to get that filled anytime soon. Just because there's a gap there doesn't mean it has to be filled. And if you reflect the oil analysis before last week, Well, let me not search that there. This is when price first gapped down. It was at $33 a barrel. We were below $30 a barrel was safe sales down to 22, right? We call the $8 sell off because of all those factors. And you guys have these videos at your fingertips, right? So what did we break down? That global oil price war is taking down the demand of oil. So global demand is low, supply is high. This is weeks ago when oil was at $33 a barrel, and we almost hit 19. Saudi slashing the price. Coronavirus is weakening China. This is when China was still struggling with coronavirus, right? Potential for further downside. Only see safe buys if we break above this previous high of 35 to go to the technical gap fill. And long term buys, right? We would need global undersupply, an OPEC deal on production cuts, coronavirus fading from the market, and price holding above this like 41 level. Otherwise, even if price came to 41, this was just going to be a premium sell off price down to 22. That would have been like a $20 call, right? But we didn't get that. We just got the safe sells below $30 a barrel, $8 down. So you guys have that video, which played out, which that oil breakdown played out, and then the previous oil breakdown, which played out great. So now all I'm seeing is, with that macro speculation I'm sharing with you guys as well, is there's very high potential for oil to go to $15 a barrel. I would just love the new month to do something like this, where it can do a very aggressive pullback, um, trap buyers, because oil buyers love to call bottoms, right? Oil buyers are loving trying to call bottoms. Oh, it's $10. Oh, it's 22. It's 25. It's 27. Oh man, it's gonna go back to 80, man. We gotta get in buy soon. They love to call that, and they get trapped in the buys. It goes right back and drops even lower, right? Like it's done that a few times now. Why is this not loading? But it's just the same type of thing, right? These little corrective moves, but it doesn't break the bearish market structure. So for the new month, I'm just seeing that. I'm just looking for that potential for just oil technical traders for the new month to trap them in those buys and then just continue down unless we get a shift in that fundamental sentiment, which I don't see yet. But if we do get that, I'll be the first to share it and say, guys, wait, it's time for oil buys. Because when it is time for oil buys, they will be nice buys. But it would be great if it went to $10, $15 a barrel. And then imagine grabbing the buys then, and then it goes back to like $40 a barrel. But we'll wait for the confirms for that. We'll wait for an actual bottom to be created fundamentally. See that? Because most guys that are trading technicals, they're just waiting for a technical bottom to be created, and they're playing off that, right? They're waiting for those technical floors when there's no real validation underneath it to support it. So it continues down to break even lower. We're waiting for fundamental support. So any more questions? Does that make sense? Everything makes sense? You guys have the other videos. You can always go and reflect. I'm just going to round off and clean up some of these key areas of interest we're going to use. And we are looking for a pullback for the new month and continuation down. Shit, man, my keyboard's nice. Maybe that was why. There you go. Right? If it doesn't make sense, we can go over it again. Like, everybody's on lockdown. We got time. You know? So OPEC. pretty much the oil cartel who negotiates between countries, major oil exporting countries, on production and cost and potentially individual costs that they're selling at, is supposed to come to a meeting about these aggressively falling oil prices, but major members of OPEC are the ones that are at price war with each other, like Saudi Arabia and Russia. Okay? When they significantly cut production and come to an agreement on that, it heavily inflates or really creates a strong fundamental support for the price of crude oil because you are having the supply being cut. This in collection with a strong global demand, like everything, like just let's just say the economy is running healthy, there is none of this lockdown stuff. Manufacturing PMI numbers globally for countries is very strong. The industrial side is very strong. That's telling us oil consumption is very high, right? You have that strong demand plus OPEC with very strong production cuts. Then that's when oil holds very bullish market structure. It holds in the 40s, 50s, $60 a barrel. Then you have anything like conflict in the Middle East. The reason the conflict in the Middle East heavily inflates the price of oil or can inflate the price of oil is the potential impact it can have on refineries and supplies, right? It's the ripple effect the physical conflict can have. Like, for example, when we saw oil inflate to $68, $67 a barrel, when Saudi Arabia was pointing the finger at Iran, saying they drone attacked their refineries, their production was going to be impacted. That move fully corrected, right? When like 2 days later they said, "Oh, never mind, everything's all good. We're back to 100% production. It's all fixed up." Right? That, for example, is just a heavy manipulation play of the markets where some oil giants just cash the fuck out quick over the weekend. But it just goes to show you that what actually impacts the price of oil is the physical supply and demand and the trade of oil, right? So with all that being said, I don't see anything right now increasing the demand of oil. I don't see anything right now decreasing the supply because you also have this vicious cycle where the output is not decreasing, right? Meaning the supply just keeps getting stocked up, but it's not being sold, right? So even when oil demand heavily starts to increase, for example, if coronavirus fears leave the market and there's a vaccine and everything goes back to normal, you're already going to have a shit ton of oil stocked up. So that is when OPEC is going to need to take action to cut production because there's already been so much like pushed out that hasn't been sold during this current period of time. If that makes sense, you guys, right? Because it's still being produced, especially from Russia and Saudi. They haven't cut production at all. So for the new month, we're just looking for a pulp. Technically, for the new month, we are just looking for that top wick created on the monthly, that lower high structure on the 4 hour daily and the weekly, and then continuation down to deeper sell-off targets for oil, unless we get a shift in that environment that we are just talking about. Yes, yes. So, is that good? Everybody good now? That makes sense. We're gonna clean up some of these levels. Just play the key ranges and price action with your confirms. So I'm gonna assume all that made sense. But if it didn't, we got a lot of oil webinars in the drive. But this is what we're looking for potentially just this week to set up and give us a pullback, or safe sells below this previous low or below 19.5. I'm gonna round this off to. But I see targets down to $15 a barrel, like that speculation.